M&M up in today's trading session. After launching two electric SUVs, the cars aimed at the compact SUV segment will hit the roads early next year.
Siemens is up close to 5% after the company's margins, EBITDA net profit beat market estimates for the last quarter. New orders are also up close to 37% on a year-on-year basis.
Ola Electric surges in today's trading session, up nearly 8% after the EV maker launches a new range of scooters and a power pod targeting gig workers and urban commuters.
NTPC Green lists at a 3% premium, but the stock surges away. Now it's up close to around 14% post the listing. The management will be joining in shortly to discuss the post-listing strategy.
Zaggle Prepaid surges after announcing a partnership with MasterCard. CEO Avinash Godkhindi tells CNBC-TV18 that the company is looking at a growth rate of 55 to 60% in FY25.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam. And as we speak, the markets, well, they're trading more or less flattish with a very mild negative bias. The Nifty Bank, that's on close to under 120 points. But otherwise, the breadth of the market is firmly in favor of the number of stocks advancing. So the street will like that. Portfolio's feeling good.
Portfolio's feeling good. What's interesting, Nigel, is that, the Nifty Bank is missing the weekly options expiry, I guess, which is why traders are not trading that. But tomorrow will be the Nifty expiry, and that's something we'll be watching out for. What's interesting is that after dropping in late trade yesterday, the Adani Group stocks are bouncing back. So Adani Ports as well as Adani Ent actually currently is among the top Nifty gainers today. In fact, it is the top Nifty gainer. So we'll keep an eye out on these stocks as well. But the stock on our radar is NTPC Green Energy. The NTPC's renewable energy arm lists on the exchange at a mild premium, and thereafter the stock surges to around 122 odd rupees versus a listing price of 111 rupees as well. We have Mr. Gurdeep Singh, who's the chairman and managing director of both NTPC and NTPC Green, joining in to discuss the company's post-listing strategies and the way forward. Mr. Gurdeep Singh, there's been a long journey. A lot of people on the street were pinning their hopes on this IPO. Not only has this IPO happened, the stock is listed, and it's listed at a premium as well. So it's been a long journey. Congratulations on undertaking that. But what we know of the stock market, and as you would know from your stint at NTPC as well, that the journey in the markets is a lot longer, measured by every quarter that you have to report your numbers for. So let's get the regulation numbers out of the way. You've raised about 10,000 crore as fresh issue. What does this number do to your balance sheet in terms of net debt, and how much do you intend to save on interest costs as a result of this?
Thank you. And let me, I think, just mention here that we have raised the 10,000 crores, but our growth plans are intact, and mostly we will be utilizing this money for funding our new projects, the capex requirement for the new projects. Let me share with you that we have at present more than around 13 to 16,000 megawatt of the solar projects plus wind projects which are under execution, and we are going to commission 3,000 megawatt this year by March 25, another 5,000 megawatt by March 26, and another 8,000 megawatt by 27. So March 27 we should be reaching to 19,000 megawatt of commission capacity. And we have already declared that we will be reaching to 60 gigawatt, means 60,000 megawatt by 2032. And this whole money mostly will be required to be invested in the capex. There will be a timing when there will be some time where we'll have the surplus cash, which will be going for the kind of optimizing the debt. But more or less, we will be going for 4:1. This means the equity will be only 20% and debt will be 80%. As you know that NTPC is having the rating which is AAA for the domestic and BBB minus, which is as far as the sovereign, as far as the international is concerned. So there is no reason that we will be taking the advantage of our funding, which will be at the most optimum price.
Okay, all right. Hi, Mr. Singh. Good morning and good to see you in. This is Nigel on this side. With quite some vigor, you were ringing that bell, I think the markets as well got quite excited. The stock, opened up 2-3% and now it's flying away. But the street is listening into what you're saying. As you're saying that you're going to be commissioning capacities, by 2032, you'll be 60 gigawatt of renewable energy, which is a big number. Give us a few basic details.
Absolutely.
You raise some money. You raise some money
And
to repay some debt. So what is the current debt post this repayment? Point number one. Point number two is, as your capacity moves up, what is the peak debt level that we'll be seeing? Highlight the capex and peak debt level. Please go ahead.
Nigel, what I was just explaining to you, that it's not that there is a typical, we have a very strong balance sheet which is backed by the NTPC itself, and our rating of this company, NGEL, is also AAA, by the way. And we are in a position to raise not only from the domestic sources but also from the international market. This is the company which is able to raise the funding at the most optimum level.
So we get that.
To any of the corporate available.
Yes. Yes,
Pardon?
Mr. Singh, we got that, Mr. Singh. Now we just want to know what is the debt currently, sir. Today, what is the debt?
See the requirement of the capex is going to be, let's say, around 5 crore per megawatt for the solar and 8 crore for the wind. What we are planning is that our solar will be almost 80 to 90% and there will be 10 to 20% of the wind.
Right.
So the requirement for the capex is up to 27 itself is about 1 lakh plus crores on that. And if you go for the 2030, it will be 3.25 lakhs crores for the solar plus wind. But let me add here, which is more important part. That important part is that there will be a investment which will be in the storage, which will be battery plus pump storage. And also going forward, there is another one which is going to be the green molecule and its derivatives. So there will be a huge capex requirement going forward. And we will be seeing that we are not going to cross the limit, and we will be having the kind of internal accruals as well as raising the debt.
You know, I was reading a note that came in from a brokerage, SBI Securities. They expect the company's revenue and profit to grow at a compounded rate of 79% over the next 3 years for the revenue, and profits at around 120% plus. Would you concur with that, or do you think, if you could give us a reasonable growth outlook, do you think these are realistic projections?
See, what I would share with you in the last FY22 to FY24, we have around 46% increase in case of EBITDA and almost around 90% in case of PAT. So we should be in a position to have the EBITDA margin per megawatt of about 65 lakhs per megawatt. So now you can start calculating rather than me giving the fixed numbers. I think the more important is that there should be a performance on the ground which will drive the numbers rather than you give the number and then calculate backward.
So by the end of the next 3 years, say FY26, FY27 and FY28, what would your capacity glide path be? Then we'll calculate.
FY27, Nigel, FY27, we will have the 19 gigawatt commissioned capacity, means 19,000 megawatt. So 65 lakhs, it's translating to around 11,000 to 12,000 crores.
12,000 crores.
Perfect.
So this is, and going forward, the growth rate is going to go on increasing. We will be accelerating our growth rather than only getting flat. Because the huge capacity what we have planned, we have a different model than most of the other players. Like we are having the joint ventures with the state governments. We have for the 25,000 megawatt with Rajasthan, 25,000 megawatt plus the green molecule with Andhra Pradesh. We have 20,000 with the 2 different companies in Maharashtra. And yesterday, if you have seen the news for the 2,000 megawatt in case of Chhattisgarh, and we are also talking to the other states. Let me just share here that fundamental part of the business. The fundamental part for the green energy is the land and evacuation, in addition to the availability of the equipments. And the land and evacuation, if you are having the land, and if you are putting a large scale and a project of 3 gigawatt to 4 gigawatt, the pooling station comes to that park. Rather than you have to wait to get the connectivity in the already pooling station. So fundamentally, we are much more sound than any other kind of businesses.
All right.
We are already having this 1,200 acre for our NTPC Green Energies Green Hydrogen Hub at Pudimadka. where we are developing
Right.
now. We are working already on that development part for the green molecule.
Got it. Got it. Mr. Singh, you're very passionate about the business, but the stock market would like to know a few numbers. And you've given us one crucial one, 65 lakhs per megawatt. So in the last year, you did little south of, 2,000 crores of EBITDA. As you're saying, by FY27, you're going to be moving to 19 gigawatts. So I've done the math quickly. 11 to 12,000 crores is what your EBITDA number should look like, which you concur as well. You briefly mentioned that. And by 2032, since you're going to go to 60 gigawatt, then back of an envelope calculation suggests that from 2,000 crores in the last year, you'll go to around, 11, 12,000 crores, which is 5 times EBITDA in the next 3 years. And by 2032, it could be more than 35,000 crores EBITDA. Rough calculation appears correct?
Yes.
So
And there should not be any doubt in that, because we have started then this NGL only after having everything in place. We have been in NTPC working on this green journey for the last decade.
Which is brilliant, sir. So the street will like to, will like what you're saying. 2,000 crores EBITDA becomes, 11,000 crores, which goes to 35,000 crores plus. All this in the matter of the next 8 years or so. Got it.
Just to add to that, Nigel, if he's saying it's 65 lakh rupees per megawatt, and if that number is correct, then it's closer to 40,000 and not just 35,000.
Yeah, I know. I was trying to be a little conservative. It's 39,000 crores approximately. So more than 35,000 crores, give or take a little bit. We're giving you some margin, sir. On that front, 35 to 40,000 crores of EBITDA. Very quickly, one more number. Yes, sir, go ahead.
Nigel, let me give you some other kind of figure. See, there has to be CUF. You people will be knowing capacity utilization factor.
Yes.
On an average for the solar projects, it is going to be 24-25%. But we have a core competency in our team, which they can design, they can construct. They can engineer, they can commission the plant, and they can operate and maintain very well. And we had been able to reach to almost 29% CUF. So, then way above any of the new player.
Mr. Singh, just help us out. Then should we take this 19 gigawatt and take around 25 to 30% capacity utilization level and then multiply by 65 lakhs per megawatt?
No. That is already taken care into that.
Already
what
taken
I was explaining to you.
Because
give me a second to explain. NTPC commissioned the first unit in 1982, 13 February 1982. After 42 years also we are able to operate at 100% PLF. So that is the kind of the quality and conscious we are. We have a very robust and kind of specification, quality requirement and the qualifying requirement for our associates, what we call it, vendors. So we are not the only investors. We had been in the power sector. We are supplying almost 1/4 of the total electricity in the country. And I'm sure that the NGL will going to play the similar role.
All right, we take that point. Thanks a lot, sir, for joining in for now and giving us the outlook on your business. The standout out here will, of course, be with increase in capacity utilization. You will obviously be able to quadruple and more than that your EBITDA. That moves from close to around 2,000 crore last year to around 12,000 crores by FY27. And as you've been mentioning, between 36 to 39,000 crores by FY32 itself. And that's something that the street would hold on to. Of course, this would come at the cost of a capex and your balance sheet expanding as well. We'll keep an eye out on all of that. Congratulations on a good listing, and we will hold you on to these numbers as we move along in the quarters to come ahead. With that, we'll slip into a short break. On the other side, we talk about market technical. Shivangi Sarda of Motilal Oswal Financial Services joins in to discuss the market technicals. Welcome back. As we move, a couple of stocks doing well. Maruti has moved to the high point of trade, and as has Trent. Both these stocks were under pressure in yesterday's trading session, so we'll keep an eye out on that. Good time to get in Shivangi Sarda for a quick tech check on the market. Shivangi, your views on the indices and individual stocks.
Good morning, Manglam and Nigel. Thank you for having me. So we've seen that markets has been witnessing some sort of a recovery here. But of course, again, we've seen lackluster move. So the markets have to hold, 24,000 odd levels. This will be a make or break zone here for it to again touch momentum for 24,500, where a lot of call writers are still sitting at the moment. So for support, 23,750, 23,950 will be an important level base to watch out for a long-term upward trending move. But of course, lackluster move could not be ruled out. But of course, if we talk about Bank Nifty, here we are seeing consolidation, and it needs a little bit of a short covering trigger for the next up move towards 53,000 levels. Now, lackluster move can be seen in the heavyweights, but some of the smaller names are showing still strength, which is keeping the index holding above 51,750, which is an important support here. Now, talking about individual stocks, my first preferred pick is on Persistent Systems. IT is holding the entire market, in fact. And despite the market volatility and the recent corrective phase, we've seen this space has outperformed and showing resilience. We have seen that, this particular stock, Persistent System, has shown strength and is making higher highs, higher lows from the last 6 months. It exactly retraced from its 50 daily exponential moving average and has been respecting the same from the last 6 months. Put call ratio for this stock has improved, and IVs have significantly dropped in this series from the start towards the end, which is kind of making the bulls very comfortable. So recommending a buy here with a target of 6,300 levels and a support of 5,850 levels. Now, the second pick is Syngene. We've seen that, over 40% open interest increase here on the long side in this series so far, and we're heading towards the monthly expiry. So exciting times ahead. Rollovers are also adding up in this stock. Consolidation breakout can be seen on the last 9 to 10 weeks. And there has been a good base formation at 835 levels, which makes the stock, quite placed to steam even higher. Price and volume surge in the last 3 to 4 sessions is making a good base here and indicating a strength. So recommending a buy here with a target of 960 and a stop loss of 900.
Okay, all right, Shivangi, thanks a lot for joining in. By the way, the stock of the last few minutes has been Ola Electric. Massive volumes. Now the stock is up close to around 13%. So big bounce is what we've seen from the highs. The stock had halved, and now it's seeing a bit of a pullback. Similar is the case with Adani Power. Volumes picking up out there. Keep in mind, even after this 5% move that we're seeing today, the stock is still down 20% in this month itself. So a good pullback on both these two names from maybe, oversold levels just in the near term. For the time being, let's get you a few ideas for profit in our special segment from Money Control Pro. Sachin Pal joins us to help us out with just that. Sachin.
Yeah, thanks. Prince Pipes, which is the 5th largest plastic pipe manufacturer in the country, delivered a muted set of numbers in the first half of FY25. While the volumes of the business grew almost 9% year-on-year, thanks to a healthy offtake from the agriculture as well as SWR segments, the realizations of the company as well as top line was under pressure due to input prices volatility. The PVC prices declined by almost 15-16% in the quarter 2, and that really had an impact in terms of channel destocking in the quarter gone by. Well, the same has continued into October as well. However, the management is hopeful of a recovery and has guided for an 8 to 10% volume growth for FY25. Well, the other key factor to watch out for is that the DGTR has recommended an anti-dumping duty on PVC imports from 7 different countries, and if that comes into play, that would really have an impact on the company's financials from a medium-term standpoint. Well, its capacity expansion in Bihar is also on track, and the same is expected to come on stream from Q4 onwards. Besides, the company has also forayed into the bathware segment through an acquisition and is looking forward to scale its presence in the bathware business and diversify its presence away from the plastic pipe segment as well. Well, these are 2-3 key factors to watch out for. Keeping cognizance that the stock price has fallen by almost 50% from its all-time high and currently trading at around 30 times FY26 estimated earnings, we believe the valuations of the company are very reasonable for accumulation from a long-term standpoint.
Thanks a lot for that, Sachin. We'll take note of that. For the time being, slip into a short break, come back, continue our focus on markets and on stock-specific action.
Welcome back. When we started the show, the markets were absolutely flat with a mild negative bias, and as we are ending the show, nothing much has changed. But in the interim, a lot of stocks have been buzzing around. Pidilite, for instance, has moved to the high point of trade, as has Polycab. So we'll keep an eye out on individual stocks, that clearly seems to be the story of the day. So what we'll do is wrap up on this edition of Chartbusters. Thank you for watching. On the other side, Trading Hour comes up with all the market action ahead.